Hey, Celeste in finishing said, small business owners and wanting our, I think there's I can't read or I'm having a stroke, home loans and wonder, I don't know. They're just basically saying, when doing a tax return, would you / did you prioritize maximizing expenses and trying to lower taxable income as much as possible in order to lower tax debt? Or has anyone purposefully left some expenses unclaimed in order to show banks a higher income? What is better and why? Okay, this is interesting. A couple of things here which I understand, Celeste. I know what you're saying, but
Yes.
just for the people who read this in the book and who are listening, the lowering the tax debt, I think you maybe mean lowering the tax liability. That's actually secondary because, and I'll give you an example. When I bought my first home in 1992, right, we had to, because you, in the ordinary course of business, you'd call Sphere Home Loans and be like, this is the situation. They'll go, okay, send us through your draft financials if you're a small business owner. And I've just gone through this myself recently. Sent through the drafts. Yeah, the lenders can get a blow of which way the wind's blowing. Okay. Back when I bought my first home, at the time, the lenders, they literally, and this is why things change all the time, so I was trading through my entity that was owned by my discretionary family trust. They wanted to see taxable income.
Yep.
That's what they were assessing on.
Yep.
Taxable income. So I'll make a number up. If I generated $100,000, I had to pay that $100,000 as Glen as an employee through the business. And that means I would have had to pay the super on top of that, so extra money on top of that. But if I just said, oh, I'm just going to take a director's fee or a distribution as a drawing, it means that Glen's $100,000 income isn't there as income, so I saved money, so I didn't have to pay super on top of that. And then it's just in the trust and it's a discretionary thing. It lands on me anyway.
Yeah.
At the time, we had to do a tax return and put it to bed, so my taxable income was very high to get the loan.
Get it, yep.
Which may have cost me thousands and thousands of dollars extra in personal income tax or extra superannuation contributions.
Yes.
As opposed to drawing it out through my trust. So I believe in this day and age, I think banks and lenders can be a bit more flexible with not being as hardline on that. But I think before you put anything to bed, speak to a mortgage broker and just go, look, this is the situation. And this is the crux of it, Celeste. You show them here are last year's or the last fully completed submitted tax return. Notice of assessment, income tax for me or the company, here's everything completed. We haven't done this year, but here's a draft P&L of what the figures look like. And a good mortgage broker will say, yep, no worries, just put it through the trust, distribution, give it to your other spouse or give $400 to each kid and all that, all good. Or the mortgage broker will say, yeah, look, we can get this across the line, but you're going to have to get them to put it to bed as a employee because this lender for your situation will need to see the notice of assessment that says you earned $100,000.
Yeah. Yeah, I think, Celeste, it's just understanding which one's what's more important in this financial year. Is it getting a home loan or is it reducing your tax? And they're going to be, you're bouncing around with that every year as a business owner, aren't you, essentially? And a lot of, you mentioned before about the flexibility of lenders. Like a lot of lenders will, not a lot, but some lenders will lend to you even though your actual personal income might be low, but your business income's high. I mean, when you look at it realistically, your company tax is 30%. The minute you go over,
it's actually less.
Or 28 or something, isn't it?
Well, 25.
25 plus Medicare and Not Medicare. Sorry. I think anyway. It's let's call it 30 for worst case, right? You as soon as you start earning over 80 grand, you're in the 32 bracket in your personal. So that's where that threshold is. If you can get a loan earning 80 grand, unbelievable. If you can show that your business is giving the profit, and that's where maybe the business owners have the occasional win, is they don't have to show as high a tax return as someone else that hasn't got the business. But yeah, as you mentioned, good mortgage broker, good tax accountant, and they're not maybe chatting to each other, but you're working with them concurrently at the same time so that you don't go too far down one way and you can't come back the other way. And
I'll add to that, but just the HO website, base rate, entity, company tax rate from the 2021-22 income year onwards. Companies that are base rate entities must apply the 25% company tax rate. It was previously 27.5%, and then 26 before. And it's basically you've got to turn over less than the aggregated turnover is 25 million for 17-18 income year and 50 million for 18-19. So
you've just scraped in.
Yeah, but this is the thing, right? A lot of it will come down to what your entity is.
Yes.
If there's PSI involved, you know what that is? Personal service income?
No.
Okay, so let's do a scenario in finishing, because I said you could go in 5 minutes ago.
Thanks,
but we're over time. Sorry, Johnny. You've been a good boy, though, and well behaved.
You're saying entity for lending or for tax?
Entity for tax and asset protection, for example.
Yeah, okay. But also tax for entity for lending as well.
Just bring that mic a bit closer. Yeah.
Lending as well.
Yes, but this is where it can get complicated. So we'll use a scenario. You and Amy have a business that's in a discretionary family trust, right? And you're the main person in the business. You employ 12 people. There's money generated. You aren't the key person. So when that money goes through the trust, you can distribute it. You can put 100 grand on Amy's tax return, discretionary. You can put 100 on yours, pay less tax that way. If it was just you were John Pigeon Consulting, working out of a trust. No, working out of trust.
Out of trust, yep.
But the personal servicing, I was like, I think it's over 90% of the income generated was from John Pigeon personal. You were a consultant. Yep. You couldn't say, okay, we've earned 200 grand. You couldn't dump 100 on Amy and 100 on you.
Yeah.
Because the PSI gets you.
Yeah.
So in that regard, it doesn't really matter. Now, if we've got a company, it's also different. Do we pay 30%, that's 25% tax inside the company and pay a director's fee or dividend?
Yeah.
Pretty much all roads lead to Rome when it comes to tax. You might get the 25% tax rate, but the money's in the company. You got to get the money out of the company, and it's going to come out through a dividend, tax paid or untax paid. It's going to come out as a director fee, which means it will land on your own personal.
Yeah.
It could be a salary or wage. So I think the question is, you need a really good mortgage broker. You really need to know what your company structure is, and then you make the judgment call. If it was, we've got this trust set up and all this stuff, and yeah, because I'm the key person or the property's got to be in my name, I can't distribute 100 grand to Amy this year. We've got to put a full 200 on my personal tax return.
Yeah.
Bingo. You're paying an extra 60 grand tax that financial year if you want this lending
to
at
get
this
the
rate.
property or whatever it is that you're lending. Yep.
So I hope that
confused you?
Confused everyone. So, yeah, we will leave it there.
That's a wrap.
You've been awesome, John, as per. Anything you wanted to say in finishing? Actually, in finishing, if you're watching on YouTube, this book, the Sort Your Property Out book and Build Your Future, this version of the book's got a red logo at the top that says AFL
alert.
Players. It's got a Players Special Edition. It's introduced by Paul Marsh, the CEO of the AFL Players Association. There's some testimonies in the front, a letter from you to AFL players. There's some testimonies from current and former AFL players. Finn Callaghan, does he play AFL?
He does. GWS Giants.
Dane Rampey.
Rampy, yes.
Rampy.
Sydney Swans. Your knowledge of AFL is improving.
It really is. Kyle Langford, is he a current player?
He's a bomber.
Dylan Shield.
He's also another bomber.
Have I met him?
You have, I think.
Yeah,
Yes.
ran into him somewhere. And Nick Natau.
Natnui. For the WA people.
So they're all current players.
Yes.
On the main game.
Yes, they are.
And they've been...
Nick Nat's not. He's retired.
And they've been past or current clients of yours.
They've either been clients of mine or still are, or read the book.
Yeah. So no one can buy this book, can they?
They cannot. No.
Talk to us about the version of Sort Your Property Out that you did for the AFL players.
Yeah, so the AFL Players Association, very passionate about education, and we do financial wellness workshops for them in the property space at each of the clubs, and they were keen to get, it was a joint initiative to get the book into every set of hands for every player that got drafted in the 2024 draft. So
yeah,
we went to the draft induction day in January and handed them out. So whether they read it or use as
monitor stand,
lever the table out is up to them. But in any case, good stuff.
Sweet. Well, thanks, John, and thanks everyone for listening today. Bye. Bye. Thanks for listening to today's podcast. If you want to support us, there is one way you can do that. You can send the episode to a friend, a family member, or your group chat if you think those people would find it valuable. We also thank you for leaving a review on Apple or Spotify. If you've listened to this podcast for some time, or if you've read any of my books, you would know that giving and generosity in a financial sense is a big thing in my life. If you think it's time that you are ready to give financially to a good cause, you could head to our website, moneypodcast.com.au/charities to see the charities that we support.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds Financial Services Licence 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective licence holders.